Hey guys, so today we're currently in some NQ longs, and as you can see, we're rapidly approaching our take profit. We're currently $450 in profit. This is a live account, so I've started to scale or move my stop loss into profit just in case price does turn around. So similar to the trade yesterday, I thought I'd just record myself hopping on and showing you guys what it's like to be in live trades. So let me give you a rundown of why I'm in this trade in the first place. So hopefully by that time we end up hitting our take profit. As we can see overall on the higher time frame, we can see that we are very heavily bullish. Similar bias to yesterday. If we jump up to the daily, this is our higher low, a higher high, right? So we've just had this one big swing to the upside. Jumping down to the lower time frames, what we can see is that yes, price has had a market structure shift right here. So we've gone from higher low, a higher high to then breaking structure to the downside, creating a lower low, a lower high, and a supposed lower low. So from here, naturally, we're anticipating a pullback, some sort of a lower high, right? So with that assumption, as we've come into our trading session today, we've jumped up or jumped down to the 15-minute time frame, and on here what we can see is that to the left we've got one imbalance right here and another imbalance right here as well. Now these are key draws on liquidity because an imbalance or a fair value gap is an area of inefficiency in price where only one side was offered. Now the market likes to be in equilibrium. For every buyer there's a sell, for every sell there's a buy. When that doesn't happen, we end up getting a fair value gap, an FVG, an imbalance, whatever you want to call it. But price does like to be in sync, right? It likes to be in equilibrium as it moves through its day-to-day business. So when price came down, it first tapped into this higher up fair value gap. And as we did, I was waiting for an entry confirmation, which we got right here. However, I just wasn't a fan. This was just a little bit before our trading session as well. Our trading session starts at the New York Stock Exchange Open, which happened right here. So as we've had this push to the downside, we've taken out all of this liquidity that was set, and then I was waiting for my entry confirmation. So I've watched price, seeing what it does, no entry, no entry, no entry. And then eventually we've come all the way into this lower fair value gap down here. And as I'm saying that, we are very close to hitting our take profit. Let's actually, just in case we turn around and do some crazy business, but there it is. So take profit has been a hit. So if I just show you, if I bring up the screen here. So there it is. This is, as you can see, a funded account with $600. Quick maths, that's $2,400. Nice and easy. So going back to what I was saying, we have this fair value gap, right? And as price is tapped into this fair value gap, we've gone down to our execution time frame, which is the 1 minute time frame. And on here, all we're simply doing is waiting for price to give us a confirmation that it wants to go from bearish to bullish. And as we can see right here, we come in with all of this impulse into this higher time frame fair value gap. We then leave a fair value gap on our way to the downside, which we then absolutely disrespect, right? Price blasts straight through it, telling us that this bearish fair value gap and this bearish momentum is no longer being respected. Boom. So then when price is pushed to the upside, we've now got our entry confirmation. We've taken our entry at the open, stops below the low. And for this trade, I was simply targeting a 1 to 2. Now, I could have very easily targeted a little bit higher. However, at 3 p.m., we did have new home sales. We did have unemployment claims throughout the day as well. So we've had a bunch of news happening. So I just thought, nice and easy, 1 to 2. That is what we're going to do. And that's it. Take profit has been hit. So overall, from entry to exit, that took 18 minutes. So 18 minutes, $2,400, and we are done for the day. Now, price could very easily climb a lot higher from here, right? As we said on the 4 hourly, this could potentially be the pivot point where this could be our lower low, and then we're swinging up to put in a lower high. So price could potentially go a little bit higher. We've got this 1 hour fair value gap just a little bit higher above us as well, so we could potentially target that. If we go down to the 15 minutes, we've got additional areas of interest as we push higher. We've obviously got the Asia highs as well that haven't been taken. We've got the London highs that are right here as well that haven't been taken. So we've got a whole bunch of liquidity above us that we can target as well. But like I said, I just want it to be nice and simple. 1 to 2, I'm out, happy with the profits, done for the day. So hope you guys understand that trading is all about keeping everything mechanical. Now, as we came into this fair value gap, I was sat there and I was thinking, you know what? I do want price to push a little bit lower. It would be nice if we had, if we go up to the 15-minute time frame, we can see that to the left, we've got this data low right here. There's a whole bunch of liquidity that's sat below this low. And in my head, I was thinking, I really want price to come down a little bit lower, take out that low, so then I can look for a higher quality setup. But that would be me trading off of emotions, right? That would be me trading off of a pre-assumption that that is what price wants to do. However, what we should do as traders is be reactive. We react to what price does as opposed to forcing our bias onto price itself. And what that simply means is I wanted price to push lower, right? I wanted it to go and take out those data lows. What did I do though? It came into my area of interest and it gave me my entry criteria. So I executed. I'm not predictive, I'm reactive. I'm reacting to what price does. If it tells me it wants to go higher from here, I'll execute the trade. If I was wrong and price goes lower and then it takes out the data lows and then it gives me another entry, I'll get into that trade too. And I'll take both trades because they both followed my plan. And that is simply it. You execute your plan no matter what. And if you have a plan, you stick to your plan over an extended period of time, you will be profitable. It's as simple as that. So with this specific trade itself, I also have a exit strategy, right? A 1 to 2 for most trades is what I aim for. Now, like I said, I can aim for the hills. I can aim for much higher areas. I can aim for this liquidity just to come onto the internet and shout, oh, I got a 1 to 6 risk to reward trade and da da da. Nobody cares, right? The only thing that you should be caring about is, are you getting a payout? Are you passing your accounts? And to do that, all you simply have to do is follow your plan. So I had an exit strategy, I followed it. I had an entry strategy, and I followed it. That is it. Nice and simple. We don't need to overcomplicate anything. So I hope you guys enjoyed this video and got an insight into how I trade and manage live trades. Now, we took a loss yesterday, but we made it back today. Nice and easy, happy days. So I hope you guys have a great rest of your trading week, and I'll catch you guys in the next video.